What if the next Palantir is hiding under $5? Three small AI companies, unknown to most investors, are quietly building technologies that could reshape the future of data, security, and automation. They're not the flashy Silicon Valley giants. They're the scrappy innovators, building from the ground up, turning cutting-edge AI into real-world power. And right now, they're trading for the price of a cup of coffee. In today's video, we're uncovering 3 hidden AI penny stocks that could redefine what undervalued really means. These companies are developing systems that see, think, and act, from intelligent surveillance to autonomous decision-making, and even the hardware that fuels AI at the edge. While the world chases big names like Palantir and NVIDIA, these tiny innovators are quietly preparing to disrupt billion-dollar industries. But remember, the smaller the stock, the bigger the risk, and the bigger the potential reward. Before we dive in, do me one quick favor. Hit that like button, and let's aim for 500 likes on this video to push it out to more traders looking for the next big AI breakout. And if you love discovering early opportunities before the crowd, make sure to subscribe, because we're just getting started uncovering the hidden corners of the AI revolution. Our first stock is Evita Solutions. Evita Solutions is a small but ambitious player in the AI video analytics and smart sensor market, trying to carve a space where big data meets real-world security. The company's core platform, Evita AI, brings artificial intelligence to traditional surveillance systems. It can analyze live or recorded footage in real time, detect motion, recognize license plates and faces, identify objects, and even spot unusual behaviors. What makes Evita interesting is that it turns ordinary cameras into intelligent devices without needing expensive hardware upgrades. They also sell the Evita ESS, a plug-and-play surveillance system that combines a rugged camera setup, 4G router, battery power, and instant connection to their cloud. It's designed for construction sites, outdoor events, or temporary surveillance. Recently, Evita launched a cloud subscription version of Evita AI, aiming to make professional-grade AI analytics affordable for small businesses and even homeowners. This gives the company potential recurring revenue and scalability that investors love to see in early-stage tech. Financially, Evita is still in its micro-cap phase, but it's showing signs of traction. In early 2025, quarterly revenue reached about $1.5 million, compared to under $400,000 the year before. The first half of 2025 saw around $3 million in total revenue, a sharp improvement over the prior year, with losses narrowing slightly. For a small firm, that's meaningful growth. However, margins remain modest, hovering around 25–30%, and the company continues to operate at a net loss. Annual revenue sits around the $7 million range with limited cash reserves. What excites penny stock traders is the narrative. Evita sits in the middle of a massive global trend: smart cities, AI surveillance, and connected sensors, but still trades at a tiny valuation. The upside comes if they can land major city or government contracts through their international partnerships. The downside is classic microcap risk: thin liquidity, small balance sheet, and possible dilution. Second stock is Artificial Intelligence Technology Solutions. Artificial Intelligence Technology Solutions, better known as AITX, is one of the most talked about speculative names in the robotics and autonomous security sector. This is a company trying to automate what security guards and monitoring teams do today. Their main business operates through a subsidiary called Robotic Assistance Devices, or RAD, which builds autonomous security units that combine cameras, sensors, AI vision, and two-way communication. Their product family includes the RAD-G for licensing and OEM AI, the RAD-R for residential use, and the RAD-M, a mobile robotic platform capable of patrolling large areas independently. At the heart of all of them is Sarah, their AI software agent that responds to real-time events. AITX markets these products as replacements for human guards, offering businesses up to 80% cost savings and 24/7 coverage. Financially, AITX is beginning to see tangible results. For fiscal year 2025, the company reported revenue of just over $6 million, a 275% jump compared to the previous year. Gross profit climbed over 500%, reaching roughly $3.7 million, and management claims their recurring revenue base is expanding rapidly through device subscriptions and monitoring fees. They've even projected recurring monthly revenue could surpass $2 million within the next year. Meanwhile, liabilities are declining, and their current ratio improved substantially, though they still face cash flow challenges. The key for investors is whether AITX can convert its pipeline of pilot programs into full commercial contracts. Every new installation means more recurring fees, which could compound fast if adoption continues. However, the risks remain heavy. This is a highly speculative, capital-intensive company that frequently raises funds through stock issuance. For penny stock fans, though, it checks all the boxes: bold tech, real products, visible growth, and massive potential if they can execute. It's a story of a small robotics firm chasing a $50 billion global security industry. Our third stock is Blaze. Blaze, ticker BEAS AI, is a very different kind of company. More established and institutional, but still small enough to attract speculative attention. Blaze designs and sells full-stack AI computing solutions built for edge AI, which means running artificial intelligence directly on devices rather than in massive data centers. Their flagship product is the Graph Streaming Processor, or GSP, a low-power programmable chip optimized for real-time AI inference. Alongside the hardware, they offer a no-code software platform that allows developers to deploy AI models for smart cities, retail stores, industrial machines, and traffic systems. The company's pitch is simple: make AI efficient and scalable outside the cloud, right at the edge of the network, where data is generated. This positions Blaze in a similar ecosystem to companies like NVIDIA or Qualcomm, but focused purely on edge AI. On the financial side, Blaze reported around $2 million in quarterly revenue during Q2 2025, up nearly 100% from the previous quarter. Gross margins improved significantly to nearly 60%, and cash reserves stood close to $30 million, a strong position for a company of its size. What really caught investors' attention were several large multi-year contract announcements, including infrastructure projects in Asia that could represent hundreds of millions in potential revenue through 2027. The challenge, however, is execution. Even with a reported backlog above $700 million, the company recognizes revenue gradually over time as those deals progress. Meanwhile, operating losses remain steep, with double-digit millions burned each quarter due to R&D and commercialization costs. The potential is massive, but so is the risk. Blaze is a classic early-stage growth company in a capital-intensive field where one delay or canceled contract can hurt financial performance. For investors, it's a high-risk, high-reward situation: real technology, real customers, and an addressable market in the tens of billions. But execution is everything. Every major tech empire started as a tiny idea, buried deep in financial reports that nobody cared to read. The truth is, the next Palantir, the next NVIDIA, the next AI giant won't announce itself. It'll grow quietly, one partnership, one breakthrough, one quarter at a time, until suddenly everyone wonders how they missed it. These under $5 innovators may look small now, but so did every disruptor before the world caught on. The question is, will you notice before Wall Street does?